Hello traders, Gary Wagner here. It is 11:50 in Honolulu, 5:50 in New York on Thursday, 4th day of April, 2024, and this is the evening report for gold and silver. Traders, after gold traded to a new intraday all-time high of $2,325.30, it did soften. Currently, we have gold trading between $2,308.50 and $2,310. That puts it down about $6.50 on the day. The low that came in today is important, $2,298.70, just above our stop at $22.9830. The dollar was in essence neutral today, gaining 0.00%, the net change up 0.002%, taking the index to 104.291. Silver also declined today, declining by 1.08%. That is a drawdown of 29.5 cents per ounce in silver futures, taking the most active July contract to $27.02. The low was 26.785. Our stop is at 26.48, so we are still actively long July silver. Traders, this first chart is a daily chart, the continuous contract of gold futures now representing the June most active contract. The one thing that strikes me overall when I look at the recent ascent of gold is when we compare the move, let's say, from about 2060 up to these highs at 2210. If you look at the open and closing price, the relationship between them and the small wicks that were contained in each daily candlestick, we saw that gold in essence opened near the low of the day and closed near the high of the day. Although the candle size began to contract as we got towards the tail end of this rally before this consolidation period came in, they were still decent sized candles all the way up until the 11th day of March when we had a small doji candle. When we compare that to this leg of the rally, starting at approximately $2,184 up to this most recent high that comes in above $23.25, what we can see is that the body size has been greatly reduced. The wicks have been expanded, meaning the exaggerated highs of the day or the exaggerated lows of the day, which shows me that this last leg does not have the kind of strength that we had during the first half of this two-legged rally. However, when we convert our daily candlestick chart to a Henkin Ashi chart or Japanese average, because of the fact that it fixes the opening price off of the midpoint of the prior day's candle, we do see that in terms of price ranges and price moves, we do have similar strength to both this first and second current leg of the rally. Gold is currently trading at $2,308. We are looking at a 4-hour Japanese candlestick chart of gold futures, this containing the bull flag formation that we identified, this being our first entry price, and this when we rolled over into our June position. As we saw this rally move higher, we did get small sell-offs in the rally, unlike this first rally, and because of that, I believe it had stamina to move to these all-time record highs. We did trade to the highest point on record today, as I said, above $2,325, but we also traded to a low of just below $2,300 per ounce. We still are actively long. Traders, Our recommendation is to maintain your current long position as well as your current stop. Even if we are stopped out, we will be stopped out with a nice profit of just shy of $100 per ounce. And traders, obviously, gold is extremely sensitive to the dollar because it is paired against the dollar, and therefore there is a 100% negative correlation between dollar strength and gold strength. When we look at the activity from this year, at the beginning of the year, we were trading at around 100 to 101 on the dollar index. It moved to a high just shy of 105, and that happened about the middle of February. That also marked the beginning of a correction, taking the dollar from just shy of 105 down to approximately 102.80, a 50% retracement, which was followed by a return to dollar strength. And we saw the dollar in essence form a double top at approximately 105 on the US dollar index. We then had it sell off for 2 days. It traded to a lower low today and a lower high when we compare today's trading range to yesterday. However, the dollar closed in essence unchanged, forming a doji. And whenever we see a doji after any kind of sizable decline or price advance, we look to see if that is a signal of either A, consolidation, or B, a key reversal. Typically, when we get both gold and silver declining or advancing in price in tandem, we tend to see silver outperforming the percentage gain during uptrends or price advances and having a larger percentage drawdown during price declines. Silver has broken below $27 per ounce, currently at $26.98. With tomorrow's jobs report, we could get some increased volatility, and we are close to our stops in both gold and silver, but both of those stops put us in a profitable trade. So we'll have to see how the jobs report affects the metals markets tomorrow. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.